There's a trading habit that destroys accounts every day. Most traders have it. Most traders defend it. And most traders don't even realize it's happening, because the habit feels completely normal, reasonable even. In fact, it feels like the right thing to do, but beneath the surface, it's quietly sabotaging your results, and once you see it, you'll start noticing it everywhere. The hidden enemy. When traders lose money, they usually blame obvious things: the strategy, the market, bad timing, bad luck. But rarely do they blame the actual problem, because the actual problem often feels harmless. It doesn't look reckless. It doesn't look emotional. It doesn't look dangerous. That's why it survives for so long. It hides in plain sight. The habit revealed. So what is the habit? Constantly second-guessing yourself. Not once. Not occasionally. Constantly. Questioning every decision. Questioning every setup. Questioning every outcome. And while that sounds responsible, it often becomes destructive. Because once doubt takes control, consistency disappears. How it shows up. Think about what happens before a trade. You find a setup. Your strategy says it qualifies. Your plan says enter. But then the questions start. What if I'm wrong? What if I should wait? What if there's a better opportunity? So you hesitate. And sometimes, you miss the trade completely. Then it works exactly as expected. Now frustration appears. The emotional cost. This creates a painful cycle. You hesitate. You miss opportunities. You lose confidence. Then because confidence drops, you hesitate even more. Now every trade feels uncertain. Every decision feels heavier. And trading becomes exhausting. Not because the market changed, because your trust in yourself disappeared. Why it feels so normal? The reason this habit survives is simple. It disguises itself as intelligence. It feels cautious, thoughtful, responsible, but there is a difference between analysis and paralysis. At some point, more thinking stops helping and starts hurting. Legendary trader Jesse Livermore understood this well. He knew that opportunities often reward decisive action, not endless hesitation. The real issue isn't uncertainty. Trading will always involve uncertainty. The issue is your relationship with uncertainty. Most traders believe they need certainty before acting. But certainty never arrives. There is no signal that guarantees success. No setup that eliminates risk. No indicator that predicts the future perfectly. And waiting for certainty creates endless hesitation. How second-guessing destroys an edge. Every strategy has an edge, but an edge only works when applied consistently. Imagine flipping a biased coin. If you skip random flips, you distort the outcome. Trading works the same way. When you skip valid setups, change rules, override your plan, you interrupt the edge. Now you're no longer trading your system, you're trading your emotions. As trading psychology expert Mark Douglas emphasized, consistency comes from trusting probabilities, not individual outcomes. What consistent traders do differently? Consistent traders still feel doubt. The difference is, they don't obey it. They understand something important. Confidence doesn't come before action. It comes from repeated action. The more consistently you execute your plan, the more trust you build in yourself. Not because every trade wins, because you're proving you can follow the process. The shift that changes everything. Here's the mindset shift. Stop asking, will this trade work? Start asking, does this trade meet my rules? That question changes everything, because now you're focused on process, not prediction. And profitable trading is built on process, not certainty. Closing. The dangerous trading habit that feels completely normal is constant second-guessing. It feels intelligent. It feels safe. but over time, it quietly destroys consistency. Trust your process, respect your rules, accept uncertainty. Because successful traders don't eliminate doubt, they learn how to act despite it. Subscribe to Mind Over Markets, because in trading, the market isn't always your biggest obstacle. Sometimes it's the voice in your own head.